All right, let's talk about this week. Because honestly, the entire market is just holding its breath. It feels like a perfect storm is brewing, and depending on how things go, we could see some serious shockwaves. So in this breakdown, we're going to get into exactly what's at stake and what you really need to keep your eyes on. So here's the deal. The market is pretty much flying blind right now. We're missing some really key economic data, which means investors are basically putting all their hopes and, all their fears onto just a couple of big events. Let's dig into why there's this huge information vacuum to begin with.
Okay, so it all kind of goes back to the recent US government shutdown. We're still feeling the ripple effects from that because it put a stop to the release of some super important economic data. And I mean the big ones. We're talking about the employment and inflation reports. The numbers the market uses to get a read on things, to take its temperature. Without that data, investors are basically just fumbling around in the dark.
And so, into this big data vacuum steps what is, without a doubt, the main event of the week, Nvidia's earnings report. And look, this is so much more than just one company's numbers. Right now, for the entire market, Nvidia has become the bellwether, the single most important measuring stick for the whole AI revolution.
So you might be asking, why all this pressure on just one company? Well, it really comes down to its massive size and influence. Nvidia has such an outsized weight in the S&P 500 and the Nasdaq that whatever it does creates a ripple effect across the whole market. A great report could lift everything up. A bad one, it could drag everybody down with it. A lot is riding on this. So you can see there are two very, very different paths the market could go down here. It's pretty black and white. If Nvidia knocks it out of the park and beats expectations, then all that AI euphoria that's been driving the rally this year gets a huge shot of adrenaline. But if they miss, well, all those whispers you've been hearing about an AI bubble, they could turn into a full-on roar, and that could easily trigger a big sell-off.
But the thing is, this Nvidia report is really just one piece of a much, much bigger puzzle. We have to zoom out a bit. The entire AI sector, it's basically built on a mountain of debt. We're talking corporate bonds, massive loans, you name it. And now, with people starting to get nervous about whether any of this will actually be profitable, you've got the makings of a potential credit crisis just brewing under the surface.
In this quote, man, it really captures the mood perfectly. There's this real anxiety building up. Analysts and observers are looking at these absolutely colossal investments in AI infrastructure, all the data centers, all the chips, and they're starting to wonder, what if this doesn't pay off? What if it doesn't generate the returns we're all banking on? Because if it doesn't, the fallout could be really, really bad. And just look at the scale of this financial gamble. The numbers are just staggering. We're talking about tech giants like Meta taking on almost $30 billion in debt. You've got Oracle and OpenAI with $15 billion. I mean, these aren't small bets. These are huge, company-defining wagers on the future of AI. So yeah, the really crucial point here is just the sheer magnitude of it all. When you look across the entire sector, the total debt being taken on just to build out this AI infrastructure could top $1 trillion. Let that sink in. $1 trillion. That's money that has to be paid back, which means these AI projects need to start making serious money, and fast. Otherwise, you're looking at a potential wave of defaults.
And hey, this risk isn't just with the big guys. It's a mirror image of what's happening in the venture capital world. We're seeing estimates that something like 95% of AI startups and projects are failing to deliver any kind of return. It's the classic high-risk, high-reward game, except right now, it looks like the vast majority of these bets are just turning out to be duds.
And when you see all of this, it's impossible not to ask that familiar, kind of unsettling question. Is this just the dot-com bubble all over again? From the late 90s. All that intense hype, that massive investment, all followed by a really painful correction when reality just couldn't live up to those sky-high expectations. Feels familiar, doesn't it?
Okay, but it's not just about AI. We need to start layering on the other headwinds because this whole AI story isn't happening in a vacuum. There are several other big pressures all coming together this week and is creating what really looks like a perfect storm for the markets. So we've got three other key areas to watch that are making things feel fragile. Some nervousness in crypto, a pretty hawkish Federal Reserve, and of course, rising geopolitical tensions. All right, first up, crypto. We've seen some pretty big outflows from the major Bitcoin ETFs lately, especially from the big one, BlackRock's. And that's a clear signal that investors are getting a lot more cautious. I mean, just a few months ago, everyone was piling into these things. But here's the interesting part. It's not a full-blown panic just yet. While the ETF investors are getting jittery,
The big corporate crypto holders don't seem to be rushing for the exits. For the most part, their holdings are stable. That suggests the big money is kind of in a watch-and-wait mode, not panic selling. At least, not for now.
Next up, we've got to talk about the Fed. The tone coming out of recent speeches has been, well, distinctly hawkish. What does that mean? It means they're signaling they are totally willing to keep interest rates high, maybe even raise them again to get inflation under control. And of course, that puts a ton of pressure on borrowing costs for everyone, from big companies to regular consumers.
And finally, we have a real wild card, a big, unpredictable geopolitical risk. Tensions are heating up between the US and Venezuela. Why? It's all about control of Venezuela's oil reserves, which, by the way, happen to be the largest in the entire world. Any kind of military conflict there could have an immediate and probably dramatic effect on global energy prices.
Okay, so let's put all the pieces of the puzzle together. It's really easy to look at these as separate stories, right? An earnings report over here, a Fed speech over there. But the reality is they are all deeply connected. They're creating this kind of cascade of risk.
So here's how it all stacks on top of each other. First, you've got the delayed economic data, which creates this fog of uncertainty. Then, into that fog, you have Nvidia's report, which basically becomes a single point of failure for the whole AI story. And that story is already shaky because of this potential trillion-dollar debt bubble. And then, pressing down on all of that, you have these macro pressures, the hawkish Fed, and that geopolitical mess. Every single layer just adds more weight and makes the whole structure more fragile.
And that brings us to the one critical question for this week. You've got tech, you've got economic policy, and you've got global politics, all colliding in this incredibly precarious way. So, which domino is going to fall first?